This is Virginia Todd with Leading Edge, and I'm a local realtor and I've been in the business for about 10 years. And I'm here today to talk about loan options with...
My name is Linda Bunce and I'm with Movement Mortgage, and I've been a senior loan officer mortgage consultant for over 30 years and happy to share my knowledge with everybody.
Now, we find over the years things change all the time, and nothing changes more than in the lending department.
Absolutely. Rates, right?
Rates.
Programs.
All sorts of things. And you actually told me this morning even more new loan programs that help first-time home buyers have just come out.
Absolutely. You hear in the news a lot of negative, and there isn't a lot of negative. There's actually some really good positive things for buyers right now, especially first-time buyers. So I'd be more than happy to explain what they just did to help all of us.
Didn't you say something about they helped the rates for first-time home buyers?
Right, yeah. So what is a first-time buyer, Virginia? I told you this morning. What is that?
Well, it's not always what people think it is. Some people think that a first-time home buyer is a brand new home buyer. They've never owned something in the past, and you telling me that's not always the case.
Correct. So a first-time buyer is what you just stated, which is someone who hasn't bought before, but it also is somebody who has not bought in the last 3 years. So I could have sold my house 3 years ago, and I'm considered a first-time buyer. And so nobody really knows that.
No.
That's why I think it's important to talk to experienced realtors and loan officers for that.
But as a disclosure, there are some first-time home buyers, government first-time home buyers, that you truly do have to be a first-time home buyer.
That is true.
Yeah.
Yes, that's correct.
But that's in the minority.
Yeah. But let's talk about the good news that just came out over the last 30 days. So, all you hear in the media is rates are going up, rates are going up. You know what? Historically, rates are still really good.
Yeah.
They're just not pandemic rates, right?
Exactly.
So that was an unrealistic time frame. So we are in a realistic time frame. But Fannie and Freddie Mac, who are the government lenders who lend their money to the banks and mortgage companies, just came out with a discount on the rates for first-time buyers.
I know.
It's unbelievable. I qualified a buyer about 2 months ago, and they had, say, one payment. And then I called them with the new numbers, and it was lower.
Wow.
And so they were even more excited about purchasing. So what they did was they said, we know that the rates have gone up. And we know as a first-time buyer, it's becoming difficult at times to feel comfortable with the mortgage payments.
Exactly.
So they put us in a position for first-time buyers that the rates are about anywhere from a quarter to a half lower.
Which is a lot.
A lot. I have a buyer the other day that is a first-time buyer buying in about the $450 range. It saved him $100 a month in his payment.
Imagine the amount
unbelievable.
of frappuccinos you could buy with that.
Yeah. So that happened, and then right after that, the other government lender, which is called FHA, Federal Housing Association, they, and both of these programs are 3% or 3.5% down payment.
Exactly.
Very low down payment.
You don't need 20%.
You don't need 20%.
20%.
That is very true, right?
Yep.
So the FHA came and said, all right, well, what we're going to do to compete against Fannie and Freddie Mac traditional loans is we are going to lower the mortgage insurance premium.
Wow.
So they lowered the mortgage insurance premium, not quite half, I would say about maybe 35 to 40%.
That's a lot.
So I have another buyer who is buying a two-family property, and when I ran the numbers, because that program comes out in March, but we can give it to buyers now, saved him $160 a month in his mortgage payment.
That is a lot.
It's a lot of money.
It is.
It's a lot of money. So, it's really positive that the programs, the banks, the mortgage companies, the federal lenders that lend to us actually are giving us some advantages so that a buyer can actually feel comfortable buying right now.
And what I notice is that it's always changing, it's always adjusting. So when everyone, gets worried about the high 7% or whatever it is. Everyone in the background is trying to figure out plans and be very creative on how to do it. And there's like so many options out there. And it changes all the time. So you cannot go based by what your cousin Mary bought, you know, 2 years ago.
I think what's really important for a buyer, and it doesn't matter who it is, whether it's a first-time buyer or whether it's a buyer that's selling a property to buy a smaller property, it really is, I show them a home buyer analysis. So they know.
My buyers love that, by the way.
Oh, good.
They really, really love it.
I love it.
It always puts it into perspective. For people like to be visual.
So what I do, which is a little bit different from the online lenders, is if a buyer says, I want a mortgage payment for $3,000 a month, I will show what does $3,000 buy you, and it's four examples of different price ranges. And now that gives us a baseline as a buyer goes out looking for a home. And we can adjust it.
Which is great. And you can adjust how much they put down and stuff like that as well.
Correct. If someone wants 3% down, 5%, 10%, 20%, we could do all of those examples and see how much does that change the monthly payment. So, you know, someone who is an expert in the field is going to help you more than if you just deal with an online lender in most cases, right?
So I know when the rates start to go up in the fall, especially, lenders start to talk more about ARMs. Can you talk a little bit more about that?
Yeah, so ARMs, what are ARMs? They're adjustable rate mortgages. Adjustable rate mortgages have been around as long as I've been lending, over 30 years, right? So ARMs are a little bit different from a fixed rate. So if you get a 30-year fixed rate, you get one interest rate, and it's fixed for 30 years. If you're in that home 30 years, it's the same rate.
That's the same rate,
Okay.
Just the taxes go up a little bit.
Taxes always go up. Federal government always charges us more, right? Other than the new programs. And but the adjustable rate mortgages, how they work is, in the past, today it's not so much, but I think it will be. So the way they work is, if you get, there's a 5-1, a 7-1, and a 10-1.
And is it always the 5, 7, and 10?
Yeah, for the most part. For the most part, those are the most common ones. And so what that means is they're going to give you an interest rate that's locked in for 5 years. And then it turns into a 1-year adjustable. I'll explain that in a minute. The 7-1 locked in for 7 years turns into a 1-year adjustable. The 10-1 locked in for 10 years turns into a 1-year adjustable.
I think where people get confused, at least I was before I became a realtor, was it's not that the loan is 5 years or 7 years or 10 years. It's still a 30-year loan.
Correct.
It's just the terms.
So they're all amortized over 30 years. All right. So you have the lower payments. Where the adjustables came in as an advantage is that because it's all about risk. If they're only locked in for 5, 7, or 10 years, they're only guaranteeing that money for that period of time. And so they could give you a lower interest rate by maybe 1/8, 1/4, 0.5% over the 30-year fix, because you're willing to take a little risk.
And you're risking that, hoping that the rates will go down
during that time period.
During that 5, 7, or 10 years, so that you can refinance.
Or the 7-1 was really built for first-time buyers. I bought my first home with a 7-1 adjustable because most first-time buyers over a 7-year period of time will typically sell their property. Refinance, do an addition to their home.
Because they might get married, have kids.
7 years is that magic number, right? So in that case, if the interest rate is lower and you're willing to take the risk of it going up after 7 years, then that makes sense.
It makes perfect sense.
In the current environment we're in 2023 here, the adjustable rates and the fixed rates are pricing out almost similar. So that's where, like, a home buyer analysis that I do comes into play, because if the adjustable is lower rate, you want to see it side by side.
You definitely do.
And you want to look at what the risk is for yourself in 7, 10, or 5 years. I don't like the 5 year as much.
You don't?
I think that's more for a very experienced buyer. All right. I like the 7-1. I like the 10-1. So what happens after let's say it's a 7-1. right? I think that was one of the questions. So it's fixed for 7 years. At the end of 7 years, it will adjust. So an example of that would be if you got a 7/1 adjustable and the rate is, say, 6% today.
Okay.
When it adjusts after the 7th year, there are caps. It can't go up more than either 2 or 5% from that 6.25 rate.
Okay.
So there's a protection cap.
And you know that ahead of time when you've signed up for whatever you're doing.
Yep, there's a very specific disclosure that you will sign that tells you what the future looks like.
Okay.
Now, there's also something called an index and a margin. So those two, the 1-year Treasury bill plus the margin, are added together, and that helps to figure out what your future rate is. Now, if rates go down at the end of 7 years, it's possible your rate could actually go down at the end of 7 years. So it's really a toss of a coin to see which way it's going to go, right?
Now, let's say it goes down by, whatever, 3%.
Yep.
Is there a cap of how much it can go down when you're signed into an
So
alarm?
if your cap is 2% max, up or down, okay? So it could go down as much as 2%. From the 6.25.
But if the market is 3%, then you would want to refinance.
Correct.
Okay.
Correct. So that's where that 7/1 I like, because, you know, rates are cyclical, right?
Yeah.
So they go up and down all the time. And so if you're sitting at a 6.25 on a 7/1 adjustable or a 30-year fixed, and rates go down to 4%, and you love the home, you love the condo, you want to stay in it,
you know you're going to be there,
then we'll refinance it and we'll give you a lower interest rate.
Okay.
Yeah.
Something that some of my clients ask me is, are rates ever like transferable? Like if you got a great rate, you know, like, oh, this, whatever, the seller
so
has
that's
a 2%
called an
rate.
assumption. It's an assumable loan. Assumable. So VA has that option, Veterans Administration, which is 0 money down if someone's a veteran. 0 money.
I know, which is awesome.
And Movement Mortgage actually pays all the closing costs on that program. So veterans come to Movement Mortgage, call LENDER Bunce.
I like that. I didn't know that.
Yes. So that is a really good option for a veteran.
That's a huge savings for some home
I mean,
buyer.
they're going to save anywhere from $3,000 to $5,000 on that.
Yeah. And another thing with veteran loans, you don't have to have, just because you could have a lot of money and you could have 20%.
Right.
VA just helps you not spend it if you don't want to.
Correct.
Maybe you want to renovate the kitchen or bathroom, you could use the money instead.
And you have to be a veteran. If you're buying with somebody else, you have to be married if you're a veteran.
Okay.
Okay, but assumability, what that means is that if I'm a veteran and I get relocated from Massachusetts to Texas,
happens a lot.
And I have a good interest rate, I have a 3% interest rate because I did the loan 2 years ago. If there's another veteran that comes in, they could assume my 3% rate.
Okay, so it's veteran to veteran.
Veteran to veteran.
It's not veteran to another.
But other than the veteran loan, I do not know of any other program that has an assumability clause on it.
That's good to know.
Yeah. The risk of assumability clause is that someone else is now paying your mortgage and you still have some liability to that. I don't know the particulars. I'd have to read the guidelines again on that.
But that's good. I'm glad that Movement pays closing costs for the veterans.
Movement is very into helping our veterans the first time, giving back. Yeah. Absolutely.
That's why I love Movement.
Yeah, it's a great company.
Any other loans we should be aware of?
I'm just trying to think. So I think the biggest thing with the loans is the first-time buyer discounts are huge right now.
Yeah. And they don't always last. It always changes.
They don't last. You know, we have state programs that sometimes there's grants available. So I know
towns.
We had a grant program in the state of Massachusetts that someone could get up to $50,000 grant that they don't have to pay back after they close. And it's not available today.
Flew off the shelf.
In 30 days. 30 days. So there are programs that are available. If you're dealing with an internet lender, they probably don't know about them. If you're talking to a local lender in your market where you're buying or a local realtor, we know about these programs. and we can help you to get free money. In my words, free money.
Exactly.
Right?
And the more you know,
The more you know.
Hopefully you found this video helpful. Again, I'm Virginia Todd with Leading Edge.
And I'm Linda Bunce with Movement Mortgage, and I look forward to helping you with your financing plan.
And feel free to reach out to us with any questions you might have. Thank you.
Thank you.